Lots of supply coming online. The Treasury market potentially at the long end. The yields are going to pop. Do you agree with that kind of scenario?
Well, we certainly think we're in a rising interest rate environment. I don't think the pace that we've seen over the last 2 weeks in terms of the increase of the yield on the 10-year is going to keep up. But when you think about a couple of things, first and foremost, global yields are rising. We're seeing that on the screen today. So that helps the U.S. yield. We've been anchored to global sovereigns, and that's going to lift a bit. Also, as a country, we're going to need to issue $1 trillion, not $800 billion this year, and that's going to be true for the next 2 years with both the budget and the tax reform. So our need to issue more is going to put upward pressure on yields. I think that's the case. I think the argument around, what happens when the yield on a 10-year gets to 3 and 3 1/4, 3.5, what happens to equity markets has been blown out of proportion. I think when you step back and look at this on a more historic basis, that hasn't been the magic level that has drawn investors out of equity markets back into fixed income markets, but it has changed the multiple people are willing to pay for those earnings that are growing very nicely.
So Art, is the bond market trying to send a message to Congress, maybe finally some would say, that actually it matters how much you borrow? Because let's be clear, they'd already said we're going to borrow a lot for the tax cut, and everybody already said we're going to borrow a lot for defense, and this seems to be the difference now is we're also going to borrow some for domestic. Is that the straw that broke the camel's back?
Well, yes and no, Dave. That's a very good point. I think that the message the market is sending is, what else are you guys going to do? So remember, we get this budget passed. So the next thing on the agenda is infrastructure spend. The talk is that's another $200 billion over a 10-year period. So that's even more spending, for the federal government. So yes, indeed, it's the market's been telling us for a while, your issuance has gone up, significantly on a year-over-year basis already. Where does this stop? And that's why you're getting so much pushback by some of the real conservative Freedom Caucus in the House, about deficits and spending. But in general, I think this is something that the market is probably going to celebrate, not having to watch this budget process, perhaps for 2 years, and getting beyond this so we can actually start focusing on things that we're supposed to be doing in terms of running the country.